CNBC's annual Disruptor 50 list is out, and no surprise, AI names, they are at the top of the list. Julia Borson joins us. She has the details. Julia.
Well, David, the big trend this year is AI, and the number one company on this year's Disruptor 50 list is OpenAI, which is reportedly valued at nearly $30 billion. The startup reached 100 million users just 2 months after its launch, and back in December, it said it's on pace to generate $200 million this year from premium subscriptions and corporate licensing fees, and $1 billion in revenue by next year. OpenAI drew a roughly $13 billion investment from partner Microsoft.
They have done a lot to help us, in addition to investing, help us like co-design and co-create these supercomputers that we train on, help us work together on products, help to get the technology out to a lot of people. You know, when we kind of jumped into this, I wasn't sure I was going to go. It's difficult at best to do a big partnership with a big company, but they have been on the whole a wonderful partner to us, and we're super grateful.
OpenAI's rise represents a massive tech shift. Of the 50 companies on this year's list, 21 told us that AI is critically important to more than half of their revenue, and 5 of the top 10 companies on the list feature key use of AI. Now, this, of course, reflects a surge in funding in this space. Generative AI-focused startups alone raised $1.7 billion in the first quarter of the year. That's up from $800 million in Q1 of last year. And there were another nearly $11 billion worth of AI deals announced in the quarter, but not yet completed. This all according to PitchBook. Now, notably, 3 of the other companies in the top 5 also leverage AI in key ways. Number 2 is fintech company Brex, which is partnering with OpenAI to power its tools. Canva, number 3, struck a deal to bring ChatGPT tools to its consumers, and Relativity Space uses AI for its 3D printed rockets. Coming up in the next hour, I'll be interviewing the CEO of Chime. It came in at number 15 on the list, and I'm sure I'll be talking to him about AI as well. Back over to you.
Yeah, Julia, it's David. I mean, OpenAI has got that interesting structure, right? It's still, a lot of it is still a 501c3. And then you've got the profitable or the for-profit business. Makes for an interesting relationship. You know, I don't know how transparent they are in terms of how much has to go back to the 501c3. I know certain things are capped in terms of where people invest and what they can expect over time in terms of a return on their investment.
Well, what's interesting is this is an unusual structure, and they did cap the returns of those early investors at 100x their returns. So still pretty meaningful returns, and it seems based on the growth trajectory so far that they will certainly get that return. And then they're talking about changing the caps for later investors in this company. But the idea is they understand that AI is going to be a utility, and they almost want to treat it as such. But it was interesting talking to Sam Altman, and that's where that interview was from. He talked about how they are open to the idea of monetizing this in different ways. But for now, they have this premium subscription for consumers. They also have the free version, but they're really working with a range of companies to offer them their tools as well. So certainly a company that wants to make money here, but also understanding that their investors are not going to make 1,000x returns. They want to make sure that caps out at 100x.